Welcome, listeners. Today I am taking a deep dive into Sri Lanka Telecom PLC SLT, asking a simple question. Over the last 5 years, from 2021 to 2025, did its business strategies actually work? I am Gan Pradeep, and this is my podcast of Sri Lanka Telecom PLC Business Strategy Analysis. Over the next few minutes, I'll walk through where SLT stood strategically, the storm it weathered in the 2022 economic crisis, and how it clawed its way back by 2025. Let's get into it. So, who is SLT? It's a listed public company on the Colombo Stock Exchange, and it is Sri Lanka's national ICT backbone with over 168 years of history. In 2025, it posted revenue of LKR 114 billion and total asset of LKR 234 billions, backed by 25 plus ESG and innovation awards, and it was rated the best mobile network by Ookla. The SLT group includes Mobitel, eChannel, Syntec in Singapore, and the Gold Submarine Cable Depot. SLT owns 87.6 of Mobitel. Strategically, SLT's vision is about seamlessly connecting all Sri Lankans, and its 2025 theme is powering the pulse, building the digital nation. It's moved through four clear phases, from building the digital highway in the mid 2010s to global reach to the SLT Mobitel unification in 2021, 2024, and now into what it calls tech co-maturity. That's the frame, a legacy telecom operator deliberately transforming itself into an integrated digital services company. Let's zoom out to environment SLT operates in using pestle and five forces, porters five forces. Politically, it operates under government ICT policy and its state-linked mandate. Economically, the 2022 crisis, inflation, currency, and depreciation hit affordability hard. Socially, digital adoption accelerated through work from home and e-learning. Technologically, 5G, iCloud, AI, and fiber are reshaping the offer, while legal and environmental pressure bring data privacy and ESG expectations. On Porter's five forces, rivalry is high. Dialog and Hutch are aggressively competitors. Buyer power is high because customers are price sensitive post crisis. And substitutes like WhatsApp and Zoom are eating into voice and SMS revenue. The one thing working in SLT's favor, barriers to entry are enormous given the infrastructure investment required. The single biggest external shock, though, was the 2022 economic crisis, which triggered real revenue pressure and pushed SLT into a net loss in 2023. Now let's look inside the company using VRIN framework. SLT's core competency is its national scale, integrated ICT infrastructure, and it's genuinely passes the VRIN test. It's valuable, rare, hard to imitate, and the non-substitutable. It's the only operator combining fixed, mobile, enterprise, and international connectivity at national scale. Key resources includes a 65,000 kilometers fiber backbone, ISO and cloud security certifications, a 168-year trusted brand, and Syntech as its national growth arm. But there's a real weakness, a high fixed cost base with debt to equity between 0.76 and 1.02 and interest recover that falls to just 0.55 times in 2023. Strategically, SLT competes primarily on differentiation, premium network quality, integrated bundles, and digital services like e-channeling and cloud, supported by focused differentiation in enterprises and government ICT. At the corporate level, this is related diversification. Telecom core, healthcare through e-channeling, global ICT through Syntech and the submarine cable depot. Importantly, this is not a cost leadership play, even in the crisis years. SLT compete on quality and integration, not on being the cheapest. Good strategy is worthless without execution. So, how did SLT actually build the organization to deliver on this? 5 pillars: infrastructure excellence, fiber, 5G, and data centers, digital transformation, cloud, AI, IoT, and cybersecurity, operational excellence, including a cost program nicknamed Waste to Cash, people and culture with an average of 22 training hours per employee, and go global through Syntech in Singapore. Structurally, SLT run a hybrid model, centralized, centralized control over strategy, capital allocation, and governance, but decentralized execution so Mobitel and Syntech retain real operational autonomy. On people, there's a strong internal promotion pipeline and NVQ based upskilling for young talent. And culturally, 7 core values underpin the brand, and leadership was tested directly during the 2022 and 2023 crisis. Restoring connectivity and holding the organization together before driving the 2025 recovery. Profit after tax up to 221%. One sharp data point: brand unification in 2021 kept marketing cost growth to just 9.3%, while revenue growth 12.3%. Execution discipline translating directly into margin. Now the numbers. And this is where the story really comes alive. Revenue grew steadily from LKR 102 billion in 2021 to LKR 114 billion in 2025, about 11.6% cumulative growth. But profit after tax tells much more dramatic story. It started strong at 12.2 billion in 2022-2021, collapsed to a loss of LKR 3.9 billion in 2023 under the weight of economic crisis and electricity tariff hikes, and then rebounded sharply in LKR 10 billion in 2025, up 221% year on year. You see the same V shape everywhere. Earnings per share went from 6.73 rupees down to 2.17, back up to 5.55. Return on equity swung from nearly 13% to negative 4.4%, back to almost 10%. And the share price range from 38.8 rupees in 2021 peaked at 92.9 in 2023 on recovery optimizing, and settled around 69.5 by the end of 2024. This is the company that took a real hit, but the underlying fundamentals recovered fast once the macro pressure eased. Pulling this all together into a sort. Strengths: national ICT leadership, fixed mobile integration, and government trust at scale. Weakness: high debt and high fixed cost, heavy resilience on the domestic Sri Lankan market, the subscriber churn during 2022-2023, then opportunities: monetizing 5G and fiber, growing cloud and data center revenue, and expanding fintech internationally. Threats: aggressive competitor pricing, OTT substitutions, and volatile energy and currency costs. So, did the strategy actually work? My scorecard has 3 columns: wins, revenue CAGR of about 2.8% through a genuine crisis, the Ookla number one network ranking, and a strong 2025 rebounded. Mixed results. The 2023 loss, a suspended dividend, and a real share price volatility. And gaps. The cost structure is still heavy. Mobile retention needs work, and ROE has not fully returned to its 2021 peak. My overall verdict: SLT's differentiation and diversification strategy proved resilient, but it was clearly vulnerable to macro shocks. And the 2025 recovery is strong evidence that the long term direction is the right one. As the conclusion, so where does this leave us? SLT has genuinely transitioned from a traditional telco into a techco, and it did that while navigating Sri Lanka's worst economic crisis in decades, all the while keeping the country's digital infrastructure running. Looking forward, 6 things matters most. First, accelerating 5G and fiber monetization through premium enterprise bundles. Second, strengthen mobile retention with loyalty programs and affordable data packs. Third, scale fintech and cloud services to diversify revenue beyond domestic telecom. Fourth, keep pushing operational and energy efficiency to protect margins. Fifth, keep investing in AI, cybersecurity and IoT to stay ahead a dialogue and Hutch. And sixth, keep leverage under control while still funding infrastructure growth. Bottom line, vision aligned execution through differentiation, diversification, and operational discipline delivered a strong 2025 recovery, and it confirms SLT's role as the backbone of Sri Lanka's digital nation.